Hello friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to another episode of Markets Tomorrow, where we look at what happened in the market during the day and also how we can plan for a better trade tomorrow. So this is analysis for December 8th, Thursday 2021. If you're not subscribed, please subscribe and share it to your friends and colleagues so that we all benefit. So without wasting time, let's get into action. As usual, we will be doing the pre-market analysis for December 9th, Thursday, expiry day tomorrow, 2021, based on all of these parameters that you see on the left side, which we will be looking at the charts. Also, we will have some data analysis on the open interest, volatility, institutional participation, sectoral watch, and global commodities, and also we will wrap up with some externals for them. So, here are the charts for you. Look at that big gap up, and that's a pro gap. It's a bullish kicker pro gap that you see there. Look at this gap. No, it's a professional gap. Pro gaps can be seen on the bank nifty in the right side also. Look at the distance. No, it's a huge gap that has happened, and look at the candle. It's clear wide range bullish candle on Nifty and a reasonably good bullish kicker candle that has formed on the bank nifty also. So what is the move? 1.7%, right? And this is following the bigger candle that we saw yesterday. So it is a big 4% of up move from the downside on the Nifty. So it's 1.7%, 293 points got gained on the Nifty, and see that it is closed higher than the last 8 days. All these 8 candles close, it's higher than that. All these 8 candles close on the bank Nifty, this is closed higher than that. So that's clearly bullishness that you can see there, right? That has happened. But remember that that bullishness has come from a big correction of around 10% and 15%, right? Respectively on the indices. So the bank nifty, what happened? It gained 666 points. That's 1.8% of gap up has happened, and it also closed above the 8 days close on the previous. But it is close at the previous, and it also closed the previous gap resistance. That's the interesting thing. See, right? So there was a gap. If you see this small doji candle below that, there is a gap, and that gap got filled by today's up move, right? So gap was the resistance and the got filled. So that is making it even more bullish. Intraday Nifty and Bank Nifty both gapped up. You can see that the intraday price action on the 15 minutes, it was a gap up and then trending up more on the Nifty, gap up, trending up more on the Bank Nifty also. So regarding the volatility expansion, what has happened is you can see that the Bollinger Bands expansion on the bearish downside seems to have halted or paused for a while. You can see that this lower band has bent little. This lower band on the bank nifty also has bent little. That could indicate that the bearishness may have taken a halt, and if that continues and you also see a similar upper band also moving sideways, if you see that in the coming few days or weeks, then we can assume that there is a consolidation that may happen. Look at the support resistances. Downside Nifty left side. This is Nifty charts. You see that currently it has the support at 17,350 to 17,400. That's all, and it has the first resistance at a major Fibonacci retracement level, which is near to, that's the 17,500 to 17,600 zone. So this is very crucial. Clearing out this decides whether the up move happen or not. Because if we see here, this is a higher low, higher high, higher low, higher high, higher low. That is what is getting formed. So that would be negated only if a close happens above this Fibonacci level of 17,500. Any close above this 17,500 or 17,600 levels can indicate the trend, the correction is over, and then we are heading upwards. Until then, it's uncertainty. Although there is a big bounce back that has happened. Similar one happened once earlier also, few days back. You can see that it had hit this 16,700 close by a region, and then it bounced back, and then it dropped. Then again it bounced back, and now we are at the same zone. So there is nothing to be too much happy or bullish about, because we are at the same place where we dropped down from, right? No, that is why it is important to close calls. Now, what is the resistance after that? You have 7800 and 850. Downside, there is a gap that is formed. So the gap between these two zones of 17300 and 17400 would be a support zone right now. No, after that you have the previous support of 7200, 300, and then below that you have the 17,000 support, right? And if that goes, you go back again to the 16700 gap support, right? So that's how the supports and rest of the Nifty is. And the Bank Nifty, if you see, you can see that it's 37,400 resistance is where it is at right now. That's the one that has to be cleared, and then if that is cleared, then you have 37,700 to 800. Then that is cleared if you have 38,038, that level. Downside, you have the support. If it comes back, you have the support at 36,900, 3700, that range. And then if that's gone, then you have the 36,500 so support. Then you have the previous swing low of 35,900 to 35,600 to 35,900. So there's supports on the downside, and the resistance we already seen. Making out of these support and resistance levels, mark them, on your intraday charts as well, so that you know when the exits and the entries has to be made appropriately as per your position. This is very critical to mark them. Bollinger Bands we have seen. Now let's come back to the momentum divergences. Momentum has gotten the sideways zone from the bearishness, both on the Nifty and the Bank Nifty on the short term, that's daily. It continues to be in the sideways today also, right? And there was a bullish divergence, reverse divergence that was seen on the Nifty, which has almost met the target today. The target was the 17,400 range, which is it has gone above that. So the target complete, and the bullish reverse divergence worked perfectly. Same time, Bank Nifty had a diluted large number of bars, a diluted bearish reverse divergence, which got negated today when it moved above that, right? So it got negated, so there's no longer a bearish divergence. I'm sorry, something on the Nifty, as I mentioned, this is not a bullish reverse divergence, but it is a bullish divergence, normal divergence, that is there, where the price is moving down and the momentum is moving up, right? So that's about the momentum. In short is in sideways in both indices on the short term, right? And trend indicators, ADX is showing that a crossover has happened on the Bank Nifty. So Bank Nifty, it has moved to the bullish zones in the short term, but Nifty is still in the the DMI negative is dominating, but you can see that the strength is coming down here. Anyway, the strength is coming down, just crossed over. So definitely bearishness come down, but medium trend ADX also has to come to the bullish zones. That is still in the bearish zone. So the trend is not, trend indicators are not saying, neither on the short term nor in the medium term, that the Nifty has turned bullish. It is still having DMI negative dominance on the medium term as well as weekly, right? So it is definitely caught up. The bearishness has reduced. The strength of that, as indicated by the green, has reduced, but definitely it has not crossed over to a new trend. It has not happened yet. So you'll have to still wait, right? Even after such a big 2 days of bullish moves. So you have to keep that in mind. What happened to volatility? Obviously, when market moved up, VIX dropped 6.5%. Further drop has happened. It's 17.26 now. And imagine that it has shooted up to 21 above levels, right? No, it's cooled off today. So implied volatility is 16.48 on the Nifty, and implied volatility percentile is 46.37. Remember, it has gone above 55 kind of levels earlier. So yeah, it is cooled off in effect. So we just have to be cautious of the volatility breaking out again on the upside, right? With the 21 levels. Otherwise, it's fine as long as it remains between this 20 and 15, and it mean reverse between that. Looks like that. I was having a doubt that there was another range on the upside that is getting found, but it's not the case, and VIX has cooled off and seems to be going back to the previous this previous zone where it had spent 2 months. So we'll have to wait and watch, but as of now, VIX cool off has happened, market is up. Open interest data analysis is showing that, look at this, tomorrow is expiry. This is 1 day before graph that you're seeing here. A lot of put supports are, yesterday it was heavily bearish, today it is kind of neutral. And Bank Nifty, you can see it's, open interest analysis, open interest charts are showing that it is turned bullish because the maximum put trading is what is dominating here. Look at the kind of supports Bank Nifty has got. So Bank Nifty definitely, as per the OI, is more bullish. Charts also indicates more bullishness. We had seen that earlier, right? There is a gap that was taken out and all that. So Bank Nifty chart wise and open interest wise is more bullish. It's a long build up on the futures debit. Put call ratio is 1.1 to 1.2, and both are bullish. And Nifty has got the highest put rating for tomorrow expiry as 17,000, which is kind of strange. That's quite far from the closing, right? Right, nearly 500 points far away from the point, but that's where the highest is there. But next to that, you have a very large put rating that is seen at 17,400, right? And the resistance is not at 17,500, it is at 17,600 maximum call rating and 17,700. So 17,400 and 17,500 maybe where the action may be happening. Bank Nifty 36,500 is far away. 30, that is where the highest put rating, and 36,000 is where the highest put rating after that. So 38,000 and 37,500 is where the maximum resistance is in as per the open interest, right? So we'll have to correlate this with what the charts say and then come out with a trade plan, right? Mark these levels on your charts when you get on the intraday trade, see if at all you're doing. Look at this green all around except for Kodak. There is quite a lot of buying that has happened in the IT stocks and big boys like Reliance, HDFC, ICICI, and all of this has also seen big buying, so that made it green. Sectoral performance, if you see ITS gained 2% and turned out even more bullish. Metal 2% gain up, auto 2%, 2.3%, pharma 1.5%, FMCG 1.3%, realty 1.5%. All of them have momentum sideways, so we just have to wait for the momentum to catch up in the position before we can take long trades on the sectors. Because none of the scanners come out with any bullish hooks, neither any bearish rounds. That's the stage where the market is right now. Although the 2 days of green wide range big 2% kind of moves may disguise us to think that it is bullishness is all over back again, but the reality is that it's somewhere in the mid, neither bullish neither it's neutral is what we are actually. That's clearly indicated by the all of the indicators, right? Whether it's RSI, whether it is Bollinger, whether it is chart patterns, moving average, support resistance, all shows that we are back to the major resistance where we got hit earlier. That's all. Institutional participation is interesting. Again selling, but reduced. Smallest selling this number happened today for some reason, but DAs are continuously buying. Today also they supported the market and then market didn't fall, right, or moved further up just because of the retail participation as well as the DIs buying. The RBI policy outcome also turned out to be positive. The market reacted positively to that. Dollar currency pair, gold, oil, global market commodities. If you see right side, what you see here is dollar index. Dollar index is consolidating after it has broken out from the two major support zones in the earlier month or a few weeks back. Right now it is kind of paused and consolidating, you can say. The currency pair USD INR meanwhile is also consolidating, but it is trying to break out, but that breakout is today it's kind of a red doji indecisive candle, but this is a consolidation and it is trying to hit the same resistance from where it usually spends some time and then comes down into the channel again. Probably that may be the same thing happen, but right now the rupee is weak. It's about 75.4 kind of level, so yeah, so dollar is strengthening. Crude oil had cooled off big time 20-25 kind of fall had happened, and then the bounce back towards the upside within the channel is happening right now. So again, it is getting back into the 70 plus levels, which is not that great for our country's economy. Gold is consolidating in the same support zone and not ready to fall down, right? And yeah, so it's following the same pattern. Remember, it is overall in the medium term it is bullish. US Dow Jones had closed bullish 500 points up yesterday. It is not open today, but otherwise nothing. No big moves on either side is seen on the other US markets like Nasdaq or S&P 500 or UK markets or DAC or CAC. So we'll have to check all of these, whether any big movements continue on this tomorrow morning pre-market, before our pre-market, right? As to what happened to this, and then accordingly take the call, right? Most likely the implications will be reflected in the SGX prior to that. No, any big moves could impact and reflect in our markets also, at least in the first half. Yeah, there are no stock actionables today because none of them, most of them are in the sideways zone. It's neither bullish neither bearish kind of view, as I mentioned earlier. So actionables here would be on the index Nifty. This is a kind of a triangle with hedged. The hedges are all 2 rupee hedges, per lot, meant only for getting the margin advantage. Basically, it's a straddle position, which is giving a sufficient bandwidth between 17,300 and 17,600. 17,600 seems to be having good call rating on the OIHRs also, so it's assumed that it may find resistance and the expiry may happen somewhere in that range or below that. So yeah, the POP is not that great, but yeah, so that is, you just have, that's only where you can play. Remember that these are all calls and puts for tomorrow's expiry, so it's, we'll have the time decay advantage, and the premium seems to be good enough and the range is good, right? Yeah, the max profit is good. If it works out, you get, depending on, so this is not a recommendation, but yeah, you can, according to your risk appetite, you can take the lot size. Portion sizing can be up to you, but yeah, basically trying to get the a range and the assumption that it would consolidate between this level. Yeah, so just to wrap up, my view is mild bearishness and neutral sideways kind of. The reason is that, and I already mentioned several times, that we had big bullish moves with bullish kicker gap that happened in both indices. Everything is fine, but we are back to where we are. Remember, we are back to where we fall down last time, right? So unless and until we cross above this area, we are still on a lower low, lower high. So once that is the same with Bank Nifty also, but market, if you look at Nifty, that's exactly that has to happen. It has to close above this 500 levels. The green close above indicates that yes, we have broken that pattern. We're breaking out the trend line or higher, whatever, swing high. We just have, that is the only way that we can, it's a Fibonacci retracement resistance also. So that's the reason why I'm mildly bearish, and basically I'm expecting that market to be sideways without resistance. There is a doubly pattern. I showed you the doubly pattern, right? It's coming back, just made 2 V shapes and then back to where we are. So there is a chance that market may not fall down because it's expiry, the levels are already set, so there could be, it may not fall down. It may try to, as per what the operator data is showing, it may try to close somewhere in the 17,500 range, most likely, right? That's why I said neutral positions. I cannot be bullish, maybe slight bullish. There is also a chance that it can face the resistance, that it can fall down or consolidate. All that can happen. So that's why I make the mild view. So VIX is also cooled off, which is actually the reason why it is mild bearish. So VIX is cooled off good. So the two things can happen. VIX can again get main revert and then go up to back it goes, or which can further cool off, because there's a lot of space downside till 15. So either of that can happen. We don't know what is going to happen. So that's why it's neutral. So always play safe with hedge positions and tight stops. Right? Keep in mind the support and resistance levels, and know where exactly you have to exit into. Right? That's all that we can do. Keep the risk low and play it safe. Right? If you're playing on options, especially. Right? Market is still at good volatility levels, so volatility has cooled off. That means it can spike up. All this you have to keep in mind. So that's my view, and it need not be your view, right? But it can help you find your view on the market. If it helps, then consider hitting the like button and share it with friends. Thanks for watching, and happy trading and happy learning. Bye.